Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Thanks for joining us again here at Ausbiz. We are expecting a lower open when we get underway in a few minutes on the local index. Let's take a look at what happened overnight on global markets. Wall Street pulling back, along with most other global equity markets. The S&P 500 falling 0.5%, the Dow down a similar margin, and the Nasdaq shedding around 1/3%. And the mood was cautious, with fresh Middle East tensions rattling nerves there, and the 30-year Treasury yield climbing to its highest level since 2007, which kept pressure on rate-sensitive stocks. That risk-off tone was clear, one bright spot being the chip makers. They rallied after Anthropic posted a strong revenue surge, keeping the AI trade alive. However, those gains were offset by declines in software stocks, with Microsoft and Meta falling more than 3%. Home Depot is on the watch list, with the home improvement giant reporting fiscal second quarter results tonight. And meanwhile, Reddit joining the S&P 500, replacing Avalon Bay. Well, President Trump has said that the US would bomb Oman if it interfered with the US blockade in the Strait of Hormuz. When asked if he would seek an extension of the Memorandum of Understanding signed in June, which expires on Monday, he said no. And Reuters reporting that a senior Iranian official said that Iran had decided to shift its policy from a defensive to a fully offensive one. And on the data front, home builder confidence in the US rose slightly, but still weak, with elevated costs weighing on the housing market. And the New York Fed Manufacturing Index rising from 15.6 to 20.6, helped by business investment related to AI. The US 2-year Treasury yield rose to 4.18%, the 10-year up to 4.72. Australian 3-year government bond yield futures rose to 4.57, and the 10 years at 5.08%. The US dollar index up slightly for the day. The Aussie is trading at 71.1 US cents. Well, oil prices settled up on global supply worries, stoked by investor pessimism about diplomatic efforts to resolve the war in the Middle East. Brent crude futures up more than 2.5% at close to $91 a barrel. Gold is up 0.7% to $4,419. Copper futures down marginally. Iron ore is down to $97 a tonne, and Bitcoin currently trading at around $64,500 US. Well, there are big shifts underway in US politics that could have major implications for investors. Earlier, I caught up with Kevin Hebner from TD Epoch to unpack how the midterm elections are shaping up for President Trump.
Now, political momentum is not in his favor. As you're mentioning, the Iranian crisis is going from bad to worse. And it looks like at minimum, the Republicans will lose the House. That's over 80% likely. The Senate continues to look like a toying cost, but the momentum is moving in the Democrats' favor. And so maybe a 55% chance that the Democrats get both houses of Congress. And that's important because Congress has been dormant in many ways, but Congress does control the purse strings. And whether it's for defense or other areas of spending, Trump has to go through Congress.
Nonetheless, what is the likely outcome of the midterms I guess, as far as the Democrats, what they're likely to win and whether he's going to have to make some compromises?
Yeah, and so in all likelihood, the Democrats take the House. And so if Trump wants any money for anything, for example, defense, he'll have to deal with Congress. And that's something he hasn't had to do the last 2 years. And he didn't have to do it the first 2 years of his first term either. Trump still controls the Supreme Court. It's very conservative, so he likes that. And he still controls the GOP. He dominates it. And Trump doesn't try to win the middle. He just tries to win the GOP. So that'll continue to be in his favor. So he'll be able to do what he wants to in terms of trade, different types of international deals, AI, regulation, home shoring. So there's still a lot of his agenda he can do. But when it comes to the purse strings, he has to talk to Congress. There is an annual budget. They're spending a lot of money on defense, and they will have to go to Congress. Well, they're going to Congress now for more money, and in all likelihood, they'll have to go to more money early next year as well for that. So he's going to have to find common ground with Congress. Congress is focused on a number of issues. One is housing affordability, a second expanding healthcare, and a third is higher taxes on the rich. At least the first two of those, Trump there's a lot of room for negotiation. I see we will see progress there. For markets, there's two big risks. One is that we see AI regulation. Trump has been extremely hands off, but AI data centers very unpopular. People want regulation. So if that happened, we would certainly see choppiness. We could see a 5 to 10% drop in the Nasdaq and the S&P as a consequence. The other big risk for markets is when we start talking about debt issues, deficit, budget negotiations. As we've seen the 30-year move up to 20-year highs today, there will be concern about the just awful fiscal outlook for the United States. It's worse than Italy. Debt is well over 100% of GDP. Even with a full employment economy, we have a deficit of 5% of GDP. And these things are only getting higher. All big elements of spending, healthcare, social transfers, interest rates, defense, they're all going up as percent of GDP. So the fiscal outlook is super challenging.
What if there is no resolution to the Iran war and oil prices remain elevated? What are the implications?
I think that should be the base case, because typically when we get into these situations, as we're seeing with Ukraine, which has gone on longer than World War I, is there aren't easy ways to end these. And the best case for the markets, if you can have WTI or Brent below $90, I think people are pretty fine with that. If you get WTI or Brent above $100, $120, that becomes a big concern. But I think the base case for markets should be that the Strait of Hormuz, it remains problematic. The issues in Iran don't, because these are not simple issues, don't get resolved quickly. And we're in this sort of war, not war situation for an extended period of time.
Well, Kevin, let's now turn to what we're seeing on the market, in particular with what you're talking about, a beginning of an extended IPO cycle. Of course, we've had SpaceX come to the market. Now attention turning to Anthropic. In fact, we've just had a recent revaluation, if you like, of that stock. Private markets putting it at about 965 billion, whereas, expectations could stretch way beyond that. What are you seeing?
So in terms of context, so over the last decade, as we've seen AI develop and diffuse across the economy, so it is a general purpose technology. It's going to be extremely important. So we're seeing that through the number of unicorns in the economy. In the economy globally, there's over 2,000 unicorns. So these are private companies valued at over $1 billion. There's 2,000 of those. About 53% are in the US, maybe 16% in China, but they're all over the world, including Australia. So there's lots of new companies, this sort of Cambrian explosion of AI-related companies. And with that, we have, and that's up 8x to 10x from a decade ago. In the same time, we now have, this year, we're going to have about $1 trillion of venture capital money invested into private companies, many of them unicorns. And that's up about 6x from a decade ago. So we really do have this big surge. And it's normal that when you have so many private companies, so many unicorns, they want to get off the hamster wheel of VC funding. Both Anthropic and OpenAI have had over 8 rounds of funding. And so they want to get financing optionality. They want to go the IPO route. So you mentioned Anthropic. People are very focused on the ARR, the annualized run rate revenue, which has been going up about 10x a year for Anthropic. And the most recent estimate is by the time the IPO, say in October, the ARR will be about $65 billion. If you put a multiple, say price to sales of 20 on that, then you get an IPO of about 1.3 trillion. You mentioned a number earlier, somewhere between 965 and 985 billion. It's likely going to be a bigger number. It's going to be smaller than the SpaceX IPO, but not a whole lot smaller. And people are now talking about 1.3 trillion. A number of people are even talking about 2 trillion, but I think 1.3 trillion, 20 times what would be the revenues at that point. It still requires a lot of growth. It requires a lot to go right, but that's where we're going to be. It'll be about a capital raise of about 50 to 60 billion, 5% public float. But it'll be the second biggest IPO of all time. It'll immediately become one of the top 20 global tech companies. And this is a company that's only existed for the last 5 years, got its first dollar of revenues 3 years ago. So it's a pretty remarkable story.
And of course, that's then likely to be followed by Open AI. What would the expectations be there, Kevin?
So OpenAI has lower revenues, and the growth rate of the revenues, the ARR, is also lower. So it could come in close, something like $1 trillion. We have to see, and that's probably going to be a Q1 event, not a Q4 event. And it's going to be interesting. But I think it's going to be, and clearly OpenAI is a major company, but not quite as interesting as SpaceX or Anthropic in terms of the moats it has and the revenue growth that it's been experiencing. And it'll also become one of the top 20 global tech companies. And there'll be, in a short period of time, 3 new companies entering that top 20. So if you fast forward, say, to 2035, we have all these unicorns, many want to go public, lots of different companies in AI space. And so the top 20 global tech companies that we have right now, it's going to be dramatically different list by 2035. And that's something which investors have to be thinking very carefully about.
Kevin Hebner from TD Epoch. Let's now refocus on the local market. Ahead of the open here, another negative start expected. SPI futures down 0.4%, but the will be very much focused on reporting with some big companies today. We've had BHP, CSL, Cochlear, and much more. We'll get across that in just a moment. Stay with us for the open.